They're not just HDFC Bank, Reliance Industries also is contributing to that fall when it comes to the benchmarks. A very good morning to you, Shrishti. And yes, though we are wearing bright colors, that's not reflected in the markets today because we are seeing very subdued trading session when it comes to the benchmark indices. As you can see, we are sub that 20,000 mark when it comes to Nifty. Right now, actually inching towards the day's lowest point. And like Shrishti mentioned rightly so, the HDFC Bank is definitely the culprit, is the top loser coming in on the Nifty, also contributing heavily to those losses for the Nifty. In fact, even Reliance Industries together is contributing to that fall when it comes to the benchmark indices. Apart from these two counters, you also have BPCL that is seeing a downtick on a downgrade that is coming from the brokerages for that particular counter. You also have Apollo Hospitals that is seeing a sharp cut, JSW Steel, Britannia are the other set of losers in trade. While on the flip side, you have the names coming in from the PSU end that are holding on to some gains. So you have Coal India that is top sectoral gain, top gainer on the Nifty, followed by Power Grid. You have Axis Bank also that's seeing a strength of approximately 1% or so. Bajaj Auto as well as NTPC that are holding on to some sort of gains as we speak. But if you look at the advanced decline ratio, very much tilted in the favor of declines as of now. Talking about the sectoral indices then, and which is the one that is losing the least, it could be the BSE PSU index and the BSE Power Index. They are the ones that are not seeing that much of a cut. You have mid-cap index trying to hold on to some positive territory, that's mid-cap 50 index. But on the flip side is the banks as well as metal and realty that are declining in trade. So that's the way how the markets are looking like at this point in time, Shrishti. But yes, all eyes definitely has to be on HDFC Bank and exactly what sort of has spooked the markets.
Well, yes, Cheryl, 3.5%, over 3.5% cut is what we are seeing on HDFC Bank, and that's after the analyst day of the company. So let's understand what were the key takeaways from the analyst day, and post that, what sort of a target brokerages are coming up with. To give us all those details, we are being joined by Sharad Dubey with us live in the studios. A very good morning, Sharad, and take us through the key highlights of the analyst day of HDFC Bank, and post that, what has actually spooked the market? What was something that the investors and the brokerages didn't like?
So basically two things happened. The NIMS numbers, they are expected to be impacted in FY24. That is roughly 25 to 30 basis points. And secondly, the brokerages downgrades also started giving a kind of a cautious note, at least in the short term for HDFC Bank. Now, if you just look at the important takeaways coming in, the NIM guidance, that has been actually cut down, especially for FY24 because of the excess liquidity which has happened. Also the net worth adjustments. Now, this is post the merger itself. That is expected to impact almost 4% in the total net worth on the FY24 value basis. Now, this is coming in for the going ahead numbers. Now, the high cost to income numbers, that is also expected to be impacted in the numbers, and going ahead, this will be actually due to accounting changes coming in. Also, a sharp uptick expected to be seen in HDFC's corporate loan book as well. Now, these were certain negatives coming in from the meet as well. And if you look at the brokerage stake as well, Jefferies has maintained its buy rating, but the target price has come down from 2100 to 2030 odd rupees. Also, if you look at Nomura, they have downgraded the stock to neutral with the target price coming from 1970 coming down to 1800 rupees per share. Macquarie also has maintained an outperform rating with the target price of 2110 rupees. Now, do remember, most of the brokerages have stated that the merged numbers which have come, there are certain negative surprises which the street was not estimating. Now, that has come out in the analyst day estimates. Also, Investec, they have maintained hold. They have reduced the target price from 1735 to 1690 rupees per share. And for InCred itself, HDFC Bank, they have maintained ad rating with a target price of 2000 odd rupees. But overall, the consensus in the street is that the margins in FY24, they are expected to remain under pressure due to excess liquidity.
All right, so margins are likely to remain under pressure due to excess liquidity is what brokerages are also highlighting. Have you got a chance to look at the Nomura report by any chance in detail? Because I believe they have gone ahead and downgraded the stock, if I'm not mistaken, isn't it?
Well, yes, the entire consensus of the street was that the downgrade coming in. And of course, you look at the numbers in downgrade and numbers, that has been significant, roughly 9% from their last target price. But eventually, the main question is the liquidity portion, especially in the short-term basis. And that is why the downgrade has come in. But of course, NIMS, that is the area of concern. That is something going ahead, the bank has actually stated in the analyst day report itself, by next year, there will be a gradual recovery as well. But the short-term pain would be there. That is why there is a cause of concern among the broking houses.
Okay, thank you so much, Sharad, for highlighting what were the key takeaways from the analyst day meeting, and post that, what are the brokerages saying on this particular counter and what sort of a target that they are looking at. But with this, viewers, let's move on and let's also connect with our experts onto the show. We are being joined by Vivek Karwa of VRIDHI Investments, as well as on the technical side, Kunal Bothra. As always, a very good morning to both of you. And Kunal, Sharad just highlighted what were the fundamental factors that are taking the stock down, and 3.5% cut, and even we can see the big impact on Bank Nifty as well. So now that 1600 is once again broken on HDFC Bank, how do you see the charts of HDFC Bank, and do you believe that at this point in time the stock should take a breather, or further selling is something that you're suspecting?
So good morning. This seems to be a certain knee-jerk reaction to the stock price. We've, actually on Monday we saw the stock falling marginally, but then today's gap down probably would, dent the charts for HDFC Bank over the very near term. But the long-term support for the stock in 2023, I think Feb or March, is the stock had taken a major support at the 1530, 1535 mark. So that would be the next level of support. But I think if those levels also get broken down, then we could be looking at a much sharper correction. So as of now, would probably wait out for 1530 as a support for HDFC Bank. But if that gets broken out, then I believe we could be looking at maybe sub or closer to that 1400, 1450 mark also for HDFC Bank.
Right, so 1530 crucial support levels coming in for HDFC Bank. If it actually ends up breaking that support, then we'll see the stock actually drift much lower from those 1500 odd levels. But let's bring on board Vivek Karwa also. Very good morning to you, Vivek, and welcome aboard. Buy now, sell now. Thank you so much for joining us on ET Now. And the first question, or rather the question to ask right now, is what should investors do, given the fact that you have HDFC Bank management flagging off those near-term risks as well, your brokerages that has taken into consideration those risks, and they have actually been pretty wobbly on this particular counter. What's your take on HDFC Bank? Do you think you will be able to break those jinx that it's seeing and also see an uptick going ahead? What should investors do?
Good morning, Shirel. And of course, I read the entire report and also had a view at Nomura report as well. Now, 2-3 things. First of all, HDFC Bank is not a short-term investment for any investor. It has to be a bit with longer-term horizon. And minimum over here, since the merger was announced, we were very clear that after the merger, the bank might take 1 year to stabilize and then move forward. So it's just hardly, say, 6 months now, and another 2 quarters, that's another 6 months, can be time given to this bank to stabilize. Now, any businesses, the EPS growth and the NIMs in particular banking sector are the most important, and which is going to be hurt a bit because of excess liquidity. But I feel, as we all have been discussing, this is going to be short-term pain. And even after the downgrade, you will see that most of the reports are giving you between 1800 to 2100 as the target of bank, longer-term target, and the bank is trading today at 1568, which is approximately the book value after whatever, say, losses or whatever liquidity crisis. You calculate between the difference between the assets and liabilities, you will find the book value to be approximately 1570, 1560. And that's where the bank stock price is today trading. So I don't find there would be big downside from here. Longer term investors particularly should start accumulating over here. And the more down it goes, I think there would be value buying which will start happening. And this was known, Shiril. We all knew that this is going to be a problem for short term, and that is what is happening today. So I'm not surprised at all. And I think these levels are good. It's giving you an opportunity to enter slowly and steadily, definitely. And I think it would be back to those 1800 levels pretty soon.
So that's the technical